Hey guys, welcome back to the channel. So I'm assuming many of you know who Cathie Wood is, and even if you don't necessarily agree fully with her investment strategy because she doesn't try and diversify, she only focuses on disruptive innovation. So in the current market cycle with raising inflation, rising interest rates, and quantitative tightening, her portfolios are really underperforming the market. However, she still has incredible views on the market. Over the long term, her portfolios have been performing well, just with higher volatility, and she is someone that I definitely listen to. Recently, she has continuously said that there's a divergence between the private and the public markets, that in the private markets, valuations are much higher than what is given to companies in the public markets. I don't focus on the private markets, so I hear her and I anyways just look at the public markets and find the companies that I believe to be undervalued given their growth into the future. But right now, after reading an article from 2015 about Palantir, which is something I knew, but it was in the back of my head, that in 2015, Palantir was valued at $20 billion. And 7 years later, although Palantir had all their growth, which I'll discuss, they are still valued at around $20 billion. So this may be what she's talking about, that if Palantir, for example, was in the private markets, would they really be valued at the same valuation that they were 7 years ago, although they really expanded their business and have had extreme revenue growth? So in this video, I want to take a glance at this article and then look at what Palantir has done since 2015 to understand, should they still be valued at that same valuation, or is Cathie Wood right about this divergence between the private and public markets? Now, before we get into the video, if you can please like and subscribe in order to support the channel. Okay, so I'm not going to go through the whole article, but I'm going to look at some of the highlights. So if we see here first, Palantir has raised $880 million at a $20 billion valuation. We see it is from 2015. So Palantir, the data analytics company used by the government agencies and law enforcement, pocketed $880 million in new funding, according to a filing from the SEC out today. So we see already that this is looking at Palantir as a government agency and law enforcement company. And it says, if we skip the next paragraph, Palantir also now has a valuation of $20.33 billion, up from $15 billion in 2014. The new valuation makes it the fourth most highly valued tech startup, just under Airbnb, Xiaomi, and Uber. And then if we skip and we see here the files revealed Palantir's work in Washington, it basically goes on to talk about different programs and agencies that it works with. So CIA, DHS, NSA, FBI, CDC, Marine Corps, Air Force, etc. And basically what this article is telling me is that in 2015 in the private markets, it's valued at $20 billion, although the only focus is on the government side of the business. So they're not even taking into account the commercial side of the business, and it's still at that $20 billion valuation. So now if we look at Palantir 7 years later, we can see, first of all, over the last 3 years, going back to 2019, they have grown their revenues from $742 billion to $1.54 billion at the end of 2021. So we see almost a doubling in the last 3 years, and we just don't have the filings going back to 2015 because it was a private company, but it was obviously a lot lower than even the 2019 number. If we look in the last year, we see total revenue growth was 41%. Government revenue growth was 47%, commercial 34%, U.S. commercial revenue growth was 102%. They have an adjusted operating income, so if we take out stock-based compensation, of $473 million, and as SBC comes down, we'll see Palantir as a profitable company. We see their adjusted free cash flow of almost $500 million and gross margins of 78%, which is typical for a SaaS business. However, if we look at just the commercial business, and remember, this article wasn't talking about the commercial business, we see that in 2019, it was $397 million. It grew to $482 million by 2020, which is a 21%. And that's although we had COVID and many companies obviously had to reduce their spending. And then into 2021, we have $645 million, a 34% increase. And also in the article, it said Alex Karp didn't want to go public, but he did discuss in interviews why he went public now is because he felt like now they actually have the product to offer. So instead of focusing on the financials, Wall Street, and typically when you're in the public markets, you have to a bit more, they wanted to really focus on the product. Now that they have that product, they're expanding, they were able to go public. Now they're really focusing on building out their customer base because they're hiring hundreds of salespeople in order to do this. So looking back to 2015, company valued at $20 billion in the private market. Looking to today, they totally expanded their whole entire business to focus more on the commercial side of things. And it's only a matter of time until that actually takes over the government side of things. And really the commercial side is where the total addressable market is. And if we look at, for example, a Skywise, which is 2 years after that 2015 valuation in 2017, That's when Skywise was built out, and right now Airbus seems to be really profiting from the Skywise platform, and this is all Palantir building it out. Still, we see there's some sort of divergence with this valuation. Now, it can be that because of the market sentiment, there is a reduction in valuations, so the risk-off sentiment leads to valuations being compressed, and that is why Palantir is less. However, it's not like this valuation was from 2020 and now the market valuations are compressing. This is from 2015. And we're talking about 7 years later when we were really in a bull market. And if you look at many valuations of software companies, they really expanded in this time frame. And we see for Palantir, this is clearly not the case. So take from this what you will. I'm an investor in Palantir. I will continue buying as long as it comes down. Right now at this level, I do have a full position, but all this geopolitical tensions and the short-term market cycle is not going to affect long-term investors. And usually long-term investors will benefit from periods like this. Thank you so much for watching this video. Please like and subscribe, and I hope to see you in the next video.